The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, how are you doing today? It's June 16th, 2011, and this is your market recap webinar. My name is June, and I have Chris and Luis here with me today.
Hi everyone.
Hi guys, hope everybody's doing well.
Yeah, quite the volatile day today. So, Chris, why don't you go ahead and lead us into the market analysis?
Sure. We're going to start with the 9-month daily view for the S&P 500. Today we put in just a small body candlestick, a flat day. Yesterday I was a bit nervous about all the selling that was going on because it was high volume. But if you look at the 3 candlesticks before that, the morning star, the market did not close under it, and the low is supposed to be support. So, and then you had that intense selling yesterday, and it just felt like a lot of the bears were just trying to massively sell and push this market lower, but they couldn't. And today you have a flat candle. So super bearish momentum yesterday. No follow through today. And it does feel like there's a type of I'm not one to really call bottoms, but it does feel like yesterday was a blow-off bottom, at least short-term wise. So that's the way I'm looking at things. From the long side, it still doesn't really look like things want to pop up. So it looks like more of choppiness or indecision is coming on into the market. June, you want to add anything to the daily view?
I think that's pretty much it. I think the market has been very volatile. What we thought was a decent reversal the last time we had our webinar, which is the Morningstar, was completely reversed. It kind of like reminds me of this, where the market looked like it was about to break out and then completely reversed. So, we get, and I think we mentioned, don't be surprised about this market. It's capable of doing anything. So just because we see a Morningstar doesn't guarantee that it'll go higher, but especially when it was unable to trade above that Morningstar right there.
All right. We're going to go into the hourly view.
Okay.
And I had drawn a falling resistance line connecting a couple lower highs. And right now that's that line is what I'm looking at. If the market breaks above that line, that will definitely be like a confirmation that yesterday was a short, at least for right now, a short-term bottom. And if it breaks above that line, we're going to see probably more choppiness, and the market's probably going to form a base and then bounce up.
Yeah, what I want to add quickly into this hourly view, since we're here, is you can almost see the market's wedging right here. And usually when it wedges like this, right, you see how prices, even though it's going lower, but it's getting tighter into this wedge. Wedges are a sign of a bottoming process. Again, just like Chris said, we're not here to call tops or bottoms, but at least we can speculate as to a close or near-term bottom. And it looks like, given the current price action, where it's been pretty choppy, I think we are kind of near that near-term bottom. But we just have to have follow-through, right? Every time the markets produce something, it never had follow-through. So that's a key thing with the market, is follow-through, conviction.
All right, and then our next analysis is going to be on the VIX. We look at it today and you go, wow, follow through from yesterday. So there was a lot of fear still coming into the markets, a lot of uncertainty. But if you look at the SPX, which we did earlier, it formed a flat candle. So what's going on here? Now we're seeing that, well, there's a lot of fear, but when there's a lot of fear, the market should be selling off, not forming a flat candlestick like it did today. So something's going on, and we have another sign that bulls are starting to actually accumulate some small bullish positions today, while there's a lot of people that are panicking. And that's the way I'm just looking at it. Now, we look at this chart, and every time we see a white candle, and then another white candle after it, it usually happens for about a couple days max, and then the markets just really just chop around and not really do anything. So looking at today as another extreme for the VIX, I'm pretty sure there's not going to be follow through tomorrow, especially with that long upper shadow on today. And that if there's no follow through tomorrow, it means uncertainty is going down again. And that's just another sign for those bulls that started adding to their longs today to make them more confident.
Yeah, I mean, just to add to what you said, I think you have to realize that there was some discrepancy, and there has been some discrepancy recently with the VIX and price action, where the market goes down but the VIX stays the same. And then recently we had 2 huge days on the VIX, but yet the market, let me just go back real fast, hasn't really dropped that much. I mean, normally when you see the VIX shoot up that high, we see something like this where it just tanks. But surprisingly, it just, especially today, where the VIX just shot up out of nowhere. Go into a 5-minute view here. I mean, especially today, you see how it just shot up, but yet the market just, seems like it was just falling, but not too far from its previous low. So it could be a lot of panic selling, but yet enough buying pressure in the market to absorb the selling. And what's interesting about the VIX, you can even see a little triangle right here, right before it broke out and had a huge run. So that could have been telling. If you saw this, if you spotted this triangle earlier in the day in the VIX, that could have told you that there might likely be some selling coming into the afternoon. And as soon as it broke out from that triangle, you got that selling going on. So overall, when the VIX gets too high, and when I mean too high, it's all relative, right? I mean, obviously it can continue higher, but you have to realize when it starts getting up into these levels here, it starts to get a bit extreme to the bearish side. Okay, so if the VIX happens to continue higher, then that's when you start getting the extreme bearishness, and that's when you have to be cautious if you're shorting, that it's time to either lock in those shorts or stop shorting, period, because you're getting that extreme bearish level. But right now, you just got to keep watch to see if it shoots any higher, or if the market does follow through from today's little recovery, then we might see a decent rebound, at least back to this 20-day moving average. Why don't we go ahead and go over some stocks that we're watching?
Okay.
Chris, you want to start?
Sure. I just have about 4 stocks, 2 longs and 2 shorts, because the markets are a bit indecisive right now and a little bit, I'm expecting some choppiness. So I like to keep it even on the long and the short side, and I don't really buy as many shares or short as many shares as I usually do because of this. There could be a possibility of a lot of whipsaws. So with that being said, the first stock that I'm taking a look at from the short side is BTU. I like how the last 3 days it was small real body candlesticks, and they're holding above support at 52.50. So looking at that, if 52.50 breaks around 52.30, 35-ish, I'm definitely taking a position from the short side. The next stock that I'm looking at is HAR. HAR is holding relatively well right now, and it's just been side trending for the last few days. So if it break under today's low, and it'll probably sell off even further. The next one is ORLY. ORLY is something that I'm looking at from the long side. Hit a nice white candle today, and it's been holding up pretty well compared to the rest of the markets. So gets above that it's right at resistance right now. So if it gets above today's high, and let's say the markets do chop around or pop up for a bit, ORLY is going to take off with it. And then the last one is PEET, P-E-E-T. PEET's in a squeeze right now, and it's near its recent highs. Yeah, nice triangle. So I'm just going to wait for a breakout either above today's high or the top of that triangle that June had recently drawn, and a move above there, and I'll be looking for the long side. Now, once again, because of the market conditions, I'm not as aggressive as I usually am, so I'm trading more conservatively, maybe half the shares that I normally do, even maybe 1/3 the shares. All right, that's what I got, Luis.
Yeah, I have just a couple of stocks, one short and one long. The first one would be MMI. I think, yeah, we mentioned this before. I just want to point out really quick, if we draw a line across the 23, the price of 23, I was mentioning to June really quick that every time that it comes down to that dip around 23, there's usually some type of spike in the volume. This is why I kind of like this stock. It's creating a solid base, aside from the fact that it's a huge triangle there, and it's about to go into a squeeze. So I would play this stock as a rebound. If the market gives us a quick rebound, I believe the stock might break out, and then just for a quick profit in and out. Because as we know, as Chris mentioned, you gotta play it lightly right now, especially how the market is moving. And the next one would be AN. AN will be played as a short. And if you guys noticed, it broke down from that base, and if we could look into that pattern, it looks some sort of a head and shoulder pattern. And now, one thing that I was noticing, I'm starting to look, is that there's the head and shoulder. Now, when it broke down, it broke down a high volume. You know how we usually play on stocks to the upside? We usually, it breaks up in a high volume, and then we wait and hope that it creates some type of flag. Well, this stock is actually creating it, but to the downside. Just like we saw the flag right there, it's created to the downside. So hopefully, we could get an entry point once it breaks from that flag. If we could look at it in the file on the weekly view, if we look at it weekly, you can tell that it reversed. The big reversal here back in October from 09, from 08 actually. Reversal pattern right there. It looks some sort of head and shoulders, and then it breaks out. It breaks out, and then it creates some sort of there's the head and shoulder, and then after that it breaks out, it consolidates, and when it consolidates, it creates a triangle there, a huge triangle. After that, it breaks out, and then if you can notice on the top, well, a few weeks before today, we can notice a small, very clean head and shoulder. So by the way the stock moves, we can tell that it creates a lot of patterns, and it follows through those patterns. So hopefully this could be a good short if the market continues down, of course. And always be careful. Be careful on other positions you take. And I think that would be it. Two stocks. I would recommend keep it lightly, just like Chris mentioned once again. And let's keep on doing what we best do. Joe, to you?
Yeah, I mean, same here. I don't have a whole lot. I mean, a lot of the stocks that we mentioned on Tuesday pretty much went out the window, especially with Netflix and Lulu and all that. I mean, Lulu actually went in for a pretty good day trade if you guys caught it. And it popped to 93. But for me, I would say same thing. You got to have both longs and shorts in this market. You never know when that rebound will occur, and when it does occur, you have to be ready if you like playing rebounds. But on the short side, I have RAX here, Rackspace, RAX, and you're going to see a lot of similar patterns where, again, right, this is a Head and Shoulders, you know, so if you've never seen a Head and Shoulders, pay attention. This is basically what it is. It's not always perfect. Sometimes you get two shoulders on the right side or on the left side, or maybe you get two heads, right? But the concept is it breaks down from this right shoulder. That's the main thing, and it did that today. But with RAX, I would say if the market rebounds, maybe it can come back and retest 40 or something, and then that would be a good short. And then we go back to our old favorite here, QLIC, which has been holding or forming some kind of a small base here, but it needs to get above 31 for us to go long again on this stock. And actually, if it breaks down, that actually makes for a decent short. So keep an eye on those two, and then also the stocks that Chris and Luis mentioned. There's still quite a good few setups out there. Obviously, don't ever overcommit to any one stock or any one position or any one side. It's still pretty dicey out there. But overall, I think, you know, market-wise, I feel like we are at a near-term bottom for the time being. And I think we almost forgot to mention that for the most part, most of these indexes or indices are at the 200-day moving average, which is at a critical level because a lot of fund managers look at that level. And so if it holds here, I expect some kind of bounce, at least a decent logical technical bounce, just for the sake of bouncing off the 200-day. So that's a very good chance we might see a short-term rally from here. But of course, the key thing is a follow-through, right? So if we can get above today's high, then that would be a better sign. Okay, so that's it for today. And if you guys are in the LA area, just to remind you guys that we have a meetup here near the Pasadena area. So we definitely welcome you all to join. And other than that, have a great day and have a good trading day tomorrow.